This is Tom Aspray with the pre-Thanksgiving Viper Market Wrap video for the week ending November 22nd. Well, last week's video, we pointed out some potentially negative signs from the AD lines we haven't seen for quite a while, right? Frankly, since 21. As you can see here, the weekly AD line in the S&P had formed lower highs here. A potential divergence. As I teach, the key support is in that prior lows on both a daily and a weekly basis, and we held up well on the pullback getting into this week, and now surged to new highs. So divergences, have been removed, and that's a great sign for stock prices as we head into the end of the year and into early 25. I certainly hope your portfolios had a good year in 2024, and one of the themes I've been stressing since the start of the year, if you search Tom Aspray at Forbes, Tom Aspray, I talk about, this was January 9th of 2024. One of my themes for the year has been how those pros on Wall Street, finding reasons not to buy stocks pretty much all year. And that was really the case in 2023. You remember the growth stocks weren't going to come back, and we had to have a recession. And so we started off the year, there were new reasons that the market shouldn't go higher, and so, hopefully you read those, no recession fears, looked at the best sectors, also had a post about, looking at the strategist year end for 2024, which is, at this point about over 1,000 points too low. So, hopefully you took it to heart and were well invested. By the end of January, a new high was already projected in the S&P, and we've had several since then. In my latest post last week, we talked about the bond market, and I've been watching the technical outlook in the bond market. It's been a very good guide for the past few years. Pretty much signaled turns in the bond market using the MACDs and the MACD histogram, which I created from Jerry Appel's great indicator and 40 years ago. But here's what we're saying. So I think we'll probably see that sort of signal in the next week or two in the bond market, and that should give stocks a further boost. That view would not really be changed by another push higher in the 10-year T-note yield. It would just postpone it for a while. So that's always a possibility. Looking at the 20-day EMA, a yield of 4.342, a drop below that, and then this low right back in here, which I think was at 4.264, would suggest that yields are ready to finally move lower. Let's look at some other weekly charts. The Spider Trust here through stock charts, shows that we haven't yet closed above the prior week's high, but look at the AD line, based on stock charts data, has agreed with the navigator. Stocks only, has moved above the prior peak, but not yet taken out that high. Okay, whereas the NYSE all is a similar situation. So I'd look for these to confirm that action in the next week or two. They still, you wouldn't want to see a drop below the lows we've had going back into October. For the QQQs, still a strong weekly chart. We're bumping into the yearly R2 here at 512.48. Potential targets now above 520. AD line here did make a new high and didn't have any divergences. The relative performance is still sort of range bound, dropped back below its moving average. So, the growth value question is still, getting, giving us mixed signals. If you look at daily AD line, the new high is more convincing. Obviously support here and those two lows. A daily RS is not, it's tracked below its moving average, which is starting to decline. One of the things I do when teaching about the advanced decline numbers is to look at the change day by day. So we'll zoom this down a little bit, and you can see what the AD lines know. This is as of early November, and you can see that the AD lines had turned down and formed lower highs, dropped below their moving averages, as we started the week. But, this week they pulled back above their moving averages here. This is as of the 21st, and then closed very strong on Friday. New highs above their resistance levels in the stocks only, close in the all, and definitely in the S&P 500 AD line. The buying was pretty solid. You can see here on this gives you the percentage. So, in Thursday's action, close to 80% of the S&P stocks were higher, and 52% on Friday. The 1500, includes the mid cap, small cap, and large cap. 69.8, a couple of solid, strong bars. QQQs less, a 60 and a 40. So, that's what we're reflecting to see in the price action here. And clearly the small caps had a really good week. In terms of the high-low analysis, nice surge in the NYSE, new highs to 284, still well below that prior peak. And also the NYSE lows, we didn't see much of a surge here as we have in the NASDAQ composite. So, if we start to see a move above these highs from November, that will be something that, needs to be monitored. You can see in the composite, we'd had that surge, going into the election. We've had a bounce back to 301, but, we're above 600, right after the election. So, so a divergence there. The old IWF, IWD dropped back, to its rising moving average last week. So, kind of fits and starts here for a couple of months. If we expand this, look at a little less data here. Let's look at a year instead of 5 years. You can see that, we're right back to the moving average. The MACD lines, have slightly crossed as of last week. And the histogram, is right just above the zero line. So clearly the close this coming week, are we going back in the range bound? We really need to see a strong close above, to the upside in the next week or two to signal that growth is indeed leading. The RS analysis, has not been supportive in the past week or so. Looking at the VIX and the VXN, you can see rallied up to the moving average, turned back down. So still no warning signs here. And given this trading range, it's need to see a really dramatic move, of higher volatility, send us a warning for the stock market. There's been a slight pickup in the index put-call ratio up to 1.29, dropped below 1 here. So, more puts are being bought in the index. Not too surprising with the price action. Overall put-call ratios closed at 0.85, so still favoring calls. We could see a spike at any point because it's been pretty low for some period of time. Let's look at the ETF report. Looking at the grid here, you can see that 67% of the ETFs closed the week above their pivots. 4 new positive signals. Interestingly, in the staples and in utilities, as well as one oil and gas ETF and natural gas. No weekly sell signals. 90% of growth or above. 80% positive weekly S and 80% positive, so that looks pretty strong. And value also looks pretty strong. 100% above their quarterly pivots. 90.9 and 100% positive DTS. So, they're both doing, pretty well. A few weeks ago, we suggested that maybe we aren't going to see a big leadership, that they're both going to edge higher, which happens. It's if when that happens, you usually look at what was it 10 or 20 weeks ago? That gives you a slight leader. But so far, they've been pretty evenly matched for a couple of months. Leverage long, still looking positive, and short ones are negative. This is the SPXL, the triple leveraged ETF. We got that quite a drop. We had a doji sell right here. heading into this week. So we were down near the Stark band in here and have moved higher. We never got a daily sell signal on a DTS basis. Confirmer and volume did turn negative, but it flipped back up. So that's an interesting development. In terms of the sector rundown, a lot of ETFs show more than 75%, or more than 50% rather, above their quarterly pivots. XLE is back in that gain. It's the highest reading we've had since October, and there are some good signs there in terms of entry. Stock traders in Valero, and we're looking for a good entry in energy ETFs. XLI had a nice rebound up to 66.7. XLY still holding up pretty good. XLP, still low and below 50. Same thing for healthcare, had another rough week. XLF financials are screaming. Bank, the KRE and the KBE, we'll see in a second. I have some really nice charts. Tech is still holding up all well, but the pattern in the XLK itself, as I mentioned last week, I had favored, another entry point as opposed to that in IWF, and certainly in the small caps. So XLC, continues to be strong. Utilities, and XLRE, back in the, So you can see one new 3 DTS signal in consumer staples in the XLP. So even though its components are lagging a little bit, that's an encouraging sign. XES gave a weekly DTS. A lot of red down here. Healthcare, materials, real estate, and of course semiconductors. Semiconductors have had a rough couple of weeks. Let's look at a chart. Of course, last week we had NVIDIA earnings, which were it came in pretty much as expected, but disappointed the market. You can see this big bar here in reaction to the news and a lower close on Friday. The daily outlook, is looking a little more negative. The OBV is just closed fractionally below its moving average on Friday. RS looks more negative, so if we get a drop below this low here in the RS and break this sort of support level, then it would be, would suggest that NVIDIA is going to have some more problems. Those of you who, listen to some of the financial networks after their earnings, needless to say, everyone they interviewed was just, oh, this is great, how many is it not a $1 trillion company? It's a, $5 trillion company, yada, yada, yada. And it's really interesting to see the post-earnings commentary and compare it to the next day's action. When it's a divergence, look at the prices. So you can see the monthly pivots at 130.77. So that's a potential support level. That's $11, below where we are. So that's about 6%. And if we look at SMH, talked to one of the students, we had this sort of like, strong close up here above the Stark band, which is high risk buy, and the technical action, as I pointed out at the time, we had lower highs in the RS. OBV looked a little bit better, but still, you had this sort of rolling over of relative performance indicated that it was lagging the S&P, and it's still done so. So we moved right back up, to its pivot and its 20-day moving average. I mean, we could always see a strong surge back above 250 to reassert, the uptrend, but until we see some positive action, we're on the sidelines for this one. There are some nice changes in the weekly sector report thanks to Jerry A. and his team, including the Excel wizard Scott. You can see we included these RS charts in addition to the tables. So you'll see a little different format. You can see the materials, they have been lagging. You can see what the RS is here. So a slow and a fast moving EMA. You can see that industrials had a good week, and so they may be ready to regain leadership But consumer discretionary, positive since October. Staples, has been negative since it peaked in the September, I guess, and it's trying to turn around. And then if you go down into some of the, healthcare, that's a stock ETF that you kind of wait till you see a turn. Financials still look strong, so I think that'll really be an asset to you in studying these things. And of course, going back to the stocks, some of the consumer discretionary, Nike, Home Depot, ORLY, back in DTS signals in terms of 3-day DTS, CTVA for the materials sector, energy, SLB again, and PSX. We already in VLL, so there was a weekly doji buy, I think, in Sun, another energy play. So let's look down in here to ones we are interested in. Financials, MasterCard, back, maybe it's completed its correction. Visa has also been under pressure, but you can see that, it's got hourly red. So normally what you look for, as we've talked about before, is you look for those to disappear, and that's complete its pullback. And also technology, Microsoft is starting to act a little better. Cisco, Apple still negative DTS, and you can see down here Broadcom, AMD, and Texas Instrument all red. That's consistent with what we just saw when we looked at the SMH. Communications, pretty good. Verizon got a 3-day great yield there. If you need yield in your portfolio, I don't think they're going out of business. I've been a client so long, they probably let me know if they were. Just kidding. And real estate, still, 50%. So not looking that great. If we go into the themes, not a lot of stuff, new, interesting stuff. Let's examine this a little closely. And, we can get down into the energy transition, electric utilities gauge. So we're seeing some signs there. Ground transportation. Got a couple of the railroads in here. Air transport, UPS, strong. Retail, HD, and I think Lowe's also flashed a DTS, and then the leisure part, sort of a mixed bag. MGM -3 across, Hilton negative weekly, and then aerospace and defense, cabinet wise, you can see it's still under pressure. And if we get the NASDAQ largest, it looks a little better here for Amazon, NVIDIA here, the daily, the way I looked at that daily chart, we'll see whether the erosion there suggests we could get a 3 DTS on NVIDIA early in the week. Tesla's, moving higher, and in the Dow stock, just those two bright spots, really Home Depot the only one. Here are the candle charts of our ETF holdings. Really amazing rally back in value. The VTV, got down to 175, now back above 80 at a new high. XLY, XLF, and of course down here we have VBK, which we just added right down on this pullback because we felt strongly that this move in the small caps was legit. Last week's action supports that. But it's got to continue to go higher for the next couple of weeks to suggest it's going to be really a strong performer. KRE looks great. And QQQ, it's lagging. KBE, the banks, it's looking really good. Well, if you're putting your plan together to invest better in 2025, I hope you'll consider some teaching one-on-one. You can see these are our holdings in the ETF report. We take it through and show you how we came to these conclusions, and have some of these positions we've had all year because we've been generally pretty bullish, and some of even the VBK we just added is up 6%. We added these two in October, I think, and they're up 13 and 16. So of course past performance is no guarantee of future results, but we do show you tried and true methods. You know, you're not going to be going out to buy a Learjet, you know, after taking classes for a few days. But I think as you get closer to retirement, you'll be really happy and qualified to manage your own portfolio. Plan on having a video next week if I don't eat too much at Thanksgiving. Hope you all have a great week and a good Thanksgiving with family and friends. Thank you.